Hey, what is going on, guys? This is Wavy. Welcome back to my YouTube channel. I know it's been a long time since I made a video here, but today I want to give you guys some free sauce on how I've been trading futures every single day and getting these payouts consistently every single month with these simple two setups that I look for when I'm trading futures. Okay, let's jump into the chart and show you guys. The first thing you need to keep in mind before we actually jump into the setup itself is market structure, right? How is the market structure? Is the structure bullish, bearish, right? This will help you formulate some sort of bias going into the day. Okay, now second thing you need to understand is balance versus imbalance, right? So pretty much what this means is balance is when price is uh, in an equilibrium or in an agreement where the buyer and seller come to an agreement and they find value in some sort of area, and usually it's represented by consolidation or range, right? So you need to avoid trading these conditions because you're going to get caught up in chop and market will not go anywhere during that condition, right? Next is imbalance, right? Imbalance is when market moves into one direction, where buyers and sellers they don't come to an agreement at a certain price, so the market will move into the next value area or a next balance area to find the value between buyer and seller. Okay, we need to trade the imbalance condition of the market. All right, so that is the couple of things I need to keep that in mind. So now let's go and talk about the setups itself. Okay, so the first setup that I look for personally is called the false break, right? False break or false breakout. Also, it's also known as liquidity sweep. In the ICT world, it's known as liquidity sweep. So if you are an ICT trader, this is going to be familiar for you guys, right? So that's the first setup that I trade. Next setup that I look for is the gap or imbalance fill. Okay, so going back to the imbalance, as I said earlier, when price moves into one direction aggressively, there's going to be left behind orders, right? In those imbalance area where price tends to come back later down the road and fill and then continue its direction. Okay, so these are the only two types of setups that I look for every single day, and of course you can combine these two together. I'll show you guys what I mean by that. Okay, so let's talk about false breakout first of all. So pretty much what false breakout looks like is when you're looking at the market, I tend to use the hourly and the 4-hour time frame for this one, and then I also look at the session highs and lows. So we want to look for some sort of 3-candle pattern on the higher time frame, right? So something like this. This would be called the swing high, right? And usually it has a wick in the middle like this. So what tends to happen is when price comes into these areas, it will make a move to break higher, right? So let's assume this is a liquidity level here. We call it a liquidity sweep in the ICT world, like I said. So price will be trading in between some sort of highs and lows, right? And this would be like an old high that price made before making this move. So what we're expecting is we want to see price go into that high, run through it, and instead of continuing higher, we want to see price reject and come back down and reverse from this level to the next level. Okay, so that is what a false breakout is. We break a high, old highs or lows, but instead of having the continuation to that direction, we look for a reversal to the opposite direction. And there's two ways that you can trade this. First way is you can literally just look for this sweep or this false break and wait for price to come back down into the same area, this same level, and take a trade right there. So you can look for this to sweep, put a limit order there, and when price comes back into that, you can take the entry with the stop loss at the new high, targeting the opposite direction. Okay, that's the first way that you can trade. Now the second way that you can trade is you can go into a lower time frame and find some sort of confirmation, some sort of entry confirmation in this location. When price breaks that high but fails to continue higher, you can look for some sort of confirmation on the lower time frame, such as IFVG, order block, anything that that will give you confirmation to enter the trade. For me, I have been using order flow footprint chart to find confirmation before I take an entry, because that has helped me get more precise entries, have a smaller stop loss, and it has been super helpful for me. So I use this setup with order flow for my first trading setups. Now the second trading setup is known as the gap or imbalance fill. If you are an ICT trader, you probably know what a fair value gap is, right? So fair value gap is a three candle pattern, right? Three candle pattern that leaves a gap between the candle 1 and candle 3. So in this case, what happens is price is moving in one direction, right? Let's just assume that we're moving up. And then what happens is we make this aggressive move up, leaving a gap in the middle, right? And in this trading, what is it called? This pattern, um, the candle 1 highs and candle 3's lows does not touch. So this will be considered a fair value gap. And in this scenario, what you would do is you look for this fair value gap, and then you look for price to come into this fair value gap and continue higher to the same direction, right? So that's why the market structure is important. This is like the basic thing that you need to understand. And a lot of traders, they tend to just look away from market structure. So understand what market structure is. So in this case, market structure is bullish since we're making higher highs, higher lows. And then we come into this fair value gap, and then we look for entry at that fair value gap, okay? So again, two ways to trade this. You can literally just set your limit order at this fair value gap with a stop loss, below this candle's low, or, a fixed stop loss and then take an entry. Or you can go into a lower time frame, look for confirmations like IFVG, FVG, order block, CISD, whatever you want to use. For me, like I said, I've been using footprint to help me get precise entry and better confirmation, and that has been helpful for me. Now, second type of gap fill or imbalance that I will look for is a two candle pattern, okay? Here's two candle pattern. So instead of having this three candle pattern fair value gap, in this case, there will be a two candle. So again, similar move, right? Aggressive move to one direction. And usually, candles have wick, so I forgot to draw that. What would happen is when price moves into one direction, let's just assume that I already have a clear structure, clear bias for the day. So I'm looking for longs, and we break this high, right? We break this previous candle's high, and I would draw a line here. So this candle's high. So I would wait for price to break above it aggressively and look for a reversal or a retracement into this high, this previous candle's high or low. If you're looking for short, in this case, I'm looking for long in this area, and then I'll look to take a long to continue to that direction, okay? And again, two ways to trade it. You can just trade it like this in the same time frame, or you can use lower time frame for confirmation. And I tend to look for this fair value gap and imbalance in the 15-minute, 1 hour, and 4 hour time frame. And then if I do see that, and it lines up with my bias, it lines up with my confluence, lines up with anything else that I'm looking at, like the FIV. I've been also using volume profile to get more confirmation and better make it stronger. I will look to take the entry on the footprint chart. Okay, so that is pretty much how I trade every single day when I'm day trading. So let me show you some examples on the real chart and break down exactly how to trade this. Okay, let's look at today's example. Okay, so if I go to the 1 hour time frame, we can clearly see this high, this hourly high right here, swing high, which is the high from previous Friday. We took that, we ran that high, but instead of continuing higher, so we can see price didn't continue higher, we failed to do that and it reversed back down. Okay, so in this scenario, you could have taken this entry as soon as price came back down into this high. So stop loss at this high, and then target it whatever you want to target, 1 to 2, make it maybe next level of liquidity, right? So you can just do this, right? Or you can be, you can go into lower time frame, look for some sort of confirmation on the lower time frame. For this example, let's use the 5-minute. So if I go into 5-minute, we can see we have this fair value gap that got inversed. This would be the IFVG. So you could take an entry after this fair value gap got inversed right here, with stop loss maybe at the swing high, right? And targeting maybe the next level of liquidity, which is London low down there, right? So this would be the false break setup. All right, let me show you one more example of a false break setup here. So if I go to the 50-minute time frame, we can see this highlighted area. This would be the Asian session range. This would be London session range. This Asian session low, which is the lowest low that was created during Asian session, swept it, and instead of continuing down lower, we made a reversal to the opposite direction. So in this case, let me drop down to the lower time frame. On the lower time frame, we do have IFVG, but we also have an order block entry all the way down here. So we can see this order block on the 5-minute. You could take a long when the order block gets retested here, right, at this candle, targeting maybe the next set of liquidity or 1 to 2 RR, whatever you want to target. Okay, so that would be a simple way to trade false break. All right, now let me go ahead and show you guys some gap fill and imbalance trade. So let me show you an example of a trade that I actually took earlier. Okay, so we can see here this low was broken, right? So coming to the market, I was bearish for the day until Asian session low this day. Okay, but right at open, right, we swapped Asian session low. So now I'm not as bearish as I was earlier, because we swapped the liquidity that I was targeting, drawn liquidity, right? And in this case, we can see price broke this low but failed to continue down lower. Now we reverse higher, but I actually missed the false break move. So now what I looked for is a continuation, the imbalance fill, right? So in this case, we can see this big candle here, right? This 50-minute candle, we broke above this, right? Aggressively broke above this, and then after this candle broke, I waited for the next candle to come into this area, and I looked for longs in this location. So I took a long right at the retest of this, with some confirmations on the footprint chart. So I think I used like 2-minute time frame, something like this, and then I had like 25-point stop loss, which is about here, and then targeting 50 points TP, which is right here, 1 to 2 RR. So that is a quick little trade that I took earlier on my funded account. Okay, that would be an example of an imbalance fill. All right, now let me show you another example of imbalance fill. Let me show you a fair value gap fill. So this would be a gap fill. So we have this. So here we can see market, made a lower low, right? Broke this low, and then it failed to break this high, right? We made a lower high, right? So the structure now turned bearish, even though I took a long here, but we failed to break this high. Now the structure is bearish, right? You can see lower lows, lower highs. And in this case, we had this 50-minute fair value gap that was formed around 11. And then you could, I didn't take this trade, but you could have waited for price to come into this fair value gap and taken a short setup here with a stop loss, maybe 50-point stop loss above this fair value gap, and then targeting maybe the next set of liquidity, which is previous day low, or just 1 to 2 RR, whatever you want to do. I would have just used like a footprint chart here as well to get a better confirmation and better stop loss. So maybe if I go to the 2-minute time frame here, we can see, let me go to 3-minute, actually 1 minute, there's actually a IFVG here. So 1-minute time frame, we have this IFVG. Right after we tap into this fair value gap, could have taken your entry here, stop loss at this swing high, targeting 1 to 2 RR, which would be right here. Boom, it hits, right? So yeah, that is pretty much how I trade every single day. And again, to make these setups stronger and get more confirmation, you can use other tools such as FIV, volume profile. That's what I've been using, volume profile. So in this case, if I were to take a FIV from this high to this low, we can see the 50% of this range lines up inside of this fair value gap. So that would be an extra confirmation, extra confluence that would make this setup more stronger. Okay, so that is pretty much all I literally trade every single day. And you don't need to complicate this, make it as simple as possible. You can always, mix and match these two setups. Okay, so if you miss the false break move, you can always look for a continuation of gap or imbalance fill to continue down the direction, right? So that is pretty much it for this video, guys. If you guys enjoyed it and this is helpful, leave a like, subscribe, and I'll be making more videos like this soon. So I'll see you guys on the next video. Peace.